right, I am so excited for you all to listen to this episode of Forward Thinking Founders. Before we get started, I just wanted to let you know that we are officially starting an email list, as we have some big plans for the podcast, and we'll be telling people on the email list first, and probably only the people on the email list. So feel free to sign up and get on the email list at f20r.com. That's F as in Frank, 20, R as in red.com. I'll see you over there. All right, how is it going, everyone? Welcome to another episode of Forward Thinking Founders, where we're talking to founders about their companies, their visions for the future, and how the two collide. Today, I'm very excited to be talking to Greg Head, who is the CEO of Scaling Point and the founder of Gregslist. Greg, welcome to the show.
Hey, man, it's great to be here.
Yeah, it is great to have you on. I remember when you first started Gregslist, I don't know, year and a half ago, and it's cool to see, it's going to be cool to see what you turn it into. And with that, let's just kind of start with what you're working on. If you can give us a little bit of your background so the audience knows, and then what you're working on right now, then we can dive a little bit into the future.
Great. Well, I've been in the software industry for 30 years, so I'm a little bit older guy here, and I started in the early 90s, and been part of 3 software adventures that went from startup to global scale. In the early days of contact management software, the precursor to CRM in the old Windows software in a box days, called ACT, one of the early CRM providers and sales automation providers in Phoenix, brought me to Phoenix, called Sales Logics, that I helped start. And we grew that up and went public. And I was also part of Infusionsoft, which is sales and marketing automation for small business. And I've done a whole bunch of other things. Been around product, and I've run software businesses, done a lot of marketing, been a CMO. And these days I have my consulting and now workshop company, and I'm starting to scale that, called Scaling Point, which helps the founders of early stage growth companies when it's still messy and not all figured out, but they're onto something. I help them with that complex puzzle, and there's a structure to that game that's not very obvious, but there's laws of nature that exist. Maybe we could talk a little bit about that. So there's a Scaling Point system that I help founders with, and I've helped about 50, deeply in about 50 companies a year, and I talk to the hundreds and hundreds of founders a year on that. But in my spare time, and Gregslist, you mentioned, started as a Phoenix resource for tech founders. I started meeting with founders after I left Infusionsoft 4 years ago. So man, it's been 3 years for Gregslist. And they all told me the same thing. In Phoenix, it's not really a software town, and there's no investment there, and you can't get talent, and there's not help, and I don't know where anybody else is. And I was talking to all these people, and meanwhile, the investors and talent and everybody else is saying, where is everybody? So literally, I just knew these people and published the list of software companies, and it kept on growing. Today, Matt, it just surpassed 500 active software companies in Phoenix, Arizona, and now we have Gregslist Dallas-Fort Worth, where I moved recently, get back to my wife's homeland, and we're going to do Gregslist Utah in January and keep on going. So, it turned into a thing that's going national. In the software ecosystem, there's all kinds of people that help in every region. There's lawyers, and there's the events people and the investors and all that. Nobody actually makes a list of all the software companies, and they're really hard to find. Like, they don't get out much because they're working all the time and so forth. So Gregslist is a list of active software companies, and you can find out what's going on in Phoenix and Dallas. You don't have that problem in Silicon Valley because everybody thinks they're in software, but these other towns, somebody need to raise the flag.
So you mentioned that they're hard to find, and in order to build a list of over 500 companies in Phoenix and obviously in other cities. That's fantastic, by the way. That's huge news.
Yeah.
I'm curious, what are some of the tactics that you use to find companies? And as you think about scaling Gregslist, how do those tactics change, or do they remain the same?
Well, it started as just me compiling the list of the people I knew, because I knew a lot of people, very active in the community, helped a lot of people. And it was kind of fun to meet new people. And I'm kind of one of those organized guys that just makes a nice list and then keeps tracking. So it actually grew from me finding companies and adding them to the list, being part of the pitch events, running around town, seeing another one, driving by, hearing a company, having people put me in touch. So it grew very organically. See, Matt, the problem is the data, these companies are there. I'm not creating the companies. I'm not creating the data in the world. But everybody's waiting for a crowdsourced thing to automatically happen. Many have tried and all have failed. Or some kind of automated AI bot. And the AI bots don't work. So like, what is an active software company? You actually have to look at them in the eyes almost, to see what it is. Because everybody's got software, everybody's got, developers, everybody thinks they're a software. But so there's a lot of, it's curated. That's why I called it Gregslist, because I did it. And I know what a software company is. So, so it's relatively human oriented. I mean, but that's the value. So 50,000 people have used Gregslist, and they spend an average of 15 minutes on the page. So I know people care. People high five me all the time. I moved to Phoenix because of Gregslist. I knew there was a tech community, and I got a job there because of Gregslist. So that's cool.
That's so cool. I think the coolest thing about it is that you bring to light now over 500 active companies, startups in Phoenix that some people may never would have known them otherwise. And because of Gregslist, they now know about them.
Yeah.
I'd love to know, how do you think about the cities that you moved to for Greglist? For example, it was Phoenix, then Dallas, then you mentioned Utah, and then you said you want this to go national. Do you have a game plan of how you want to approach different tech hubs?
Well, I'm experimenting with it. So one thing, what I know now after 3 years is that it's useful, and I updated it every month with new information, new adds and deletes and updates, and people move around. And I got pretty good at that in my, couple hours a month spare time. But everybody wanted more lists and everything like that. So we're going to expand a lot more lists so people could say, who are the blockchain guys in Phoenix? Who's exactly in Chandler? Who are the sales and marketing software in North Dallas? Or, more specific questions. The more specialized the list, the more useful it is. So I'm experimenting. And so Salt Lake is a very active software community. Phoenix and Dallas are big towns with a lot of software, but they're not known as software communities. So their common knowledge is, there's not a lot of software here. But there's not a lot of funded software, for one. And so those are the ones we see on TechCrunch and everything else, and then the headline. So you don't see all the rest of these. So something very common about all tech ecosystems. Eventually, we'll get everybody and get Silicon Valley last. They have the least need. They're already running around. They know who's hot and not, and all that kind of stuff. Everybody else is a little more struggling. So you can imagine everywhere from Boston to San Diego, even Seattle and the rest. Like, job seekers are really looking for tech companies. They want to find the companies. Investors are looking, right? Talent, service, these are the people that entrepreneurs, my friends, are complaining they can't find, right? And so now people are finding them. That's why I do it. It's for the entrepreneurs. It's not, we get to wave the flag, we have tech in Phoenix or whatever, but that's so entrepreneurs can recruit talent there and get investor dollars.
So you come from an extremely impressive background of growth and marketing. I mean, you scaled multiple companies to multi-millions of dollars in revenue. I don't know how big Infusionsoft got, but I know it was huge. And you now are almost flipping the script. And it's like, okay, you've done the big company thing, the big tech thing. Then you've started Scaling Point, which is helping maybe smaller companies or bigger companies grow. And now you're back in the founder seat, the startup founder seat with Greglist. I'm interested to hear, do you think that your experience with Infusionsoft and ACT lends very well for the future success of Greglist? Do you think it is do you think it might be hard because it's like a totally different skill set? How do you think about that?
Well, one of the reasons that chronic entrepreneurs, Matt, you'll be one of these, right? We all suffer from the same need to do something cool and crazy and all that kind of stuff. So in my case, I kind of sort out what hasn't changed in the world. And some of it's not very obvious. Like most of the stuff that has to do with our brains has not changed. We like stories, and there's like fundamentals of all of this stuff, especially marketing communications, have not changed because our brains haven't changed. But the technologies and common knowledge and all kinds of tools and other things have changed. So I think it's an advantage because, you know, Gregslist is a little product-y, and I have a lot of product experience, right? And I know how to do the phases. I know how to say, well, it's just me for a few hours a month in my spare time, and I can imagine the phased experiences that says this is a national thing that's quite interesting, right? I don't know what it's going to be. So, and the marketing game and all that. So I have a lot of deep savvy, and I'm a junkie for this stuff. So this is my fun. Like some people watch football on Sundays, and to me, I fiddle around with, gosh, I wonder what's going on at Kansas City Tech or something like that, right? Talking to people, hanging out with those people. So, it's just my funkiness. For people who've done it before, they usually are overzealous about how savvy they are about their opinion. They can't really stand back and say, maybe I don't know what I don't know. So I have to keep hitting myself in the head. The fact I slow rolled it for 3 years as a volunteer project, was part of that. So I have to kind of check myself. I write the 3-year plan and then I put it in the drawer, and then 3 months later. So I don't know. I just have to keep checking myself. I'm a total believer in you can have a big vision, but you don't have to know exactly what's going to happen in a year. I kind of have the plan for the next 3 months, but I don't know exactly what's going to happen. So like to your question about how I'm going to do nationally, I'm going to try 3 cities and I'm going to see how that works. And I'm going to try another 3 cities and see how that works. So far, I'm finding there's a lot of commonality between cities. So, not surprisingly.
Definitely. So you mentioned something there about the phases of growth, and you've been there, and you can now estimate when those phases will come. So I want to get into those in a second, but I have one last question on Greglist. If you're open or willing to share, have you thought about different ways that you want to make money off of Greglist, whether it's membership or ads, or I'm just intrigued as a user of Greglist. Yeah. How do you think about making money off it?
Well, my first, as a volunteer project, just that Greg would update this list, that people would send me occasional notes, but I mostly did it myself, and people just let me do it. By the way, that's why the opportunity exists, because it was disguised as work and nobody else would just go do this, literally. So, sorry, what was your question there?
Yeah, sorry. The question was, I have been a huge fan of Greglist, and I would probably pay to access it in some way. How do you plan to charge for it?
So in order for me to go say, because people told me, hey, Greg, you could take us to other towns and go nationally, you could have more lists, it could be really cool. And I kind of said, no, it's pretty much in this box that says 3 hours a month, stop bugging me about it. And then when I said, so many people said, this is awesome. I said, all right, if I can find a simple monetization thing, then I can imagine putting some more resources in it, getting help for managing the data, build a new website, get some more, promotional help. So I'm going to try. I'm launching with, lightweight sponsorships, right? 10 of the tech leaders in Arizona that have already been helping in tech that want to chip in a little bit to be, get their awareness on the page, and including the economic development folks, in Phoenix, Arizona, and all the cities and things like that. And may keep it simple, something I can manage pretty simple, and imagine taking to 10 cities. It's easy to imagine 26 ways and all the whiteboards you could monetize, but I think the game will change once I get it to 10 or 20 cities, and we'll see what happens then. But so it'll be a simple, PBS style, lightweight, polite sponsorship. It won't be an in-your-face ads, silly thing. So what people like about Gregslist is that they know Greg curates this. I kind of pick away at the companies, and somebody cares behind here, and it's Greg. So they don't want it to be polluted, and they want it to be kind of nice. So they're, lightweight sponsorships and partnerships to start So how I'm going to do it. Phase one.
Phase
By the
one
way,
sounds
man,
good.
I don't have to make this a big company. My ambition is to have a huge impact, basically get all the software companies in America and make all the entrepreneurs say, enough, I can't handle all the talent and, and investment and customers and all that kind of stuff. And, but, and make a good living doing it, have fun. Like, that'd be a cool company. I've helped 3 companies, go to global scale. 2 of them got to 100 million. 1 went public. Like, I don't need to play the VC funded software growth game. I help those people all over the world, but in the States, but this will be a fun thing in my spare time. And I'll still help entrepreneurs with Scaling Point. By the way, and that's really early stage. It's up and running. I've got a product or service, but it's not scaling. Once they get big and VPs of everything and Series C funding, you can't really help them that much.
Yeah, that makes a lot of sense. I actually want to dip into that side of things and just generally talk about growth. And based on your experience going through all cycles and all levels, would you be open to outlining the general phases of growth that a startup goes through and how a founder should think about resources at that phase or whatever iteration you want to answer that of? I'm curious about that.
Yeah, there's a couple ways that are pretty common to look at. If you look at lots of companies, if you're an investor, or you talk to a lot of companies, you see companies go through this, you'll see there's a lot of commonalities. One of the things that's not very obvious for the outside is growth happens in kind of stair-stepped phases, right? You don't just continually, incrementally, you force yourself to get through one thing and then you have to change something at the end of that stair to get to the next level. It's pretty brutal kind of thing. But I would say in the phases of growth companies, which most companies are not growth companies, they're just small businesses and large businesses. If you're the crazy one trying to change form, change the world, change form, go from startup to scale, you've got to get through phases. By the way, there's no company that's got to super scale that didn't get through those early crazy phases. So how I built this podcast and the rest goes back to that early stage. So the first stage is the ideation phase, and yes, everything's possible, right? And if you're a smart person like a chef who could make any kind of food, you imagine that you could make this restaurant with every kind of food that you like to make. And then your first epiphany, the first phase is realizing that a business is one kind of food in one place for one audience, so they love it and they line up. And the CEO doesn't cook it, right? So that's the first epiphany. I call that going from ADD to OCD. Not in a pejorative way. There's just like you actually have to go out and try a bunch of stuff and then specialize down to be something pretty specific. That's actually fundamental. You could, investors call it product market fit, which isn't a very useful concept for entrepreneurs because they think if they're selling something, then they must have product market fit, but it's much deeper than that. So that's actually the first phase is get up and running and then start to narrow down on what works exceptionally well, which is a subset of that. And like at Infusionsoft, starting selling to all small business, the more we narrowed our target and narrowed our message, the faster we grew, which is counterintuitive. So the ones that are starting to scale, show me a company that's scaling fast, getting funded, getting priced. I'll show you they're known as the best at something important for someone specific, which by that time they're saying no to most things, not yes. So that's the biggest misconception about growth is, I call it the myth of more, is that if we're a little company, we do this, then as we grow, we ought to be able to do a lot more, right? So Matt, you're in the zone there where you had this big idea, now you got a few employees that you're, man, if I could only do more. Well, your growth plan is usually a subset. There's a better business inside your business. A subset of your target. It's really just these people, just these things, where the space is open and you can kill it and it's repeatable processes and people line up. We only line up for specialists. We do not line up for generalists. It's the marketing magic trick. So that's the phase in between startup and scale. Another way to look at it, Matt, is what Brad and Clade and others taught in Infusionsoft. You hear this a lot. The ones and the threes. Have you heard this one? The ones and the threes is where you go through internally a pretty seismic shift in your business. 300,000, 100,000 to 300,000, 300,000, 1 million, 1 million to 3 million, like tripling, right? 3 million to 10 million, 10 million to 30. The
Yep.
tripling, by basically every one of those phases, you look inside the business and you kind of have to do everything differently. Like your accounting software needs to change, your people need to change, your process need to change. And we went through that in Fusion. It happens every time. It's very normal. It's one of the reasons why founding CEOs struggle to stay with their companies. Faster it grows, they're not playing the different sport along the way. They got to be an athlete, and it's rugby down here and it's baseball up there, and you got to keep learning altogether new sports. It's one of the misconceptions too. It's very hard to see from the outside. It's always there. And somebody says, hey, I have a $10 million company, and last year we were this, and next year we'll be that. You can pretty much predict the internal crap they're going through. How did you know, right? So, that kind of thing. But that's another phased approach kind of thing. So that's misunderestimated.
I want to dive into the CEO scaling with the company. The fastest growing companies scale exponentially. It's not linearly.
Yeah. Uh-huh.
And generally, from what I've read, people scale linearly. And when you're with a fast growing company, especially if you're the CEO, you need to also scale exponentially. What advice or tips would you have for a CEO or someone who wants to be CEO of a company that's growing exponentially? How do you level up that quickly and keep up with the pace of your company?
Yeah, so the first thing is to know that that's happening, because most founders look at the business and it starts to go, and then it's just more of everything, and right, they're throwing stuff at it. But if they're getting good advice and if their head is screwed on enough to see it, it's hard to see it in the firefight. I mean, it's really hard to see it. But if you get good advice, the first thing is to get the best help you can at the phase you're at, and start to get help from the next phase. Right? There's people for every phase, and investors and experience there. So the first thing is get the best help you can. You cannot do it alone, right? Which is really hard for a lot of entrepreneurs. So first rule is to know that game exists, and you're going to have to play it harder. Man, I believe that founders are different than normal people. Not genetically. We're just freaks. We are all in on this, right? Our egos, Our net worth, our everything, which is a force of nature. It's the founder force is really important in the world. And, founders need to use that force to make themselves change. So here's the irony, Matt. Here's a quotable. Founders want to change the world. They expect the world to change, but they don't want to change themselves as they go through this journey. They want to play the game they were playing when it was 10 million and it's now 50. So they just have to unhinge from that and keep themselves moving. So I just think the founders ought to use that force to play this game hard. Like like Silicon Valley loves founders that can stay and play the game. Like, think about how many phases Mark Zuckerberg went through, right? And we just think he's a smart software guy and a smart business guy. No, he kept learning this and learned Chinese in his spare time. It's an exponential growth thing that normal people don't do.
That's interesting. It's like if you're a founder type person, or you're just a straight up founder, you're almost doing that anyways. And it's just finding, in some ways, the way I perceive what you just said is you should be doing that anyways. And you should just hope to build a company that challenges you to keep doing it and not coasting or something like that.
Yeah. Well, I think a lot of the reasons founders create, and I plead guilty, is because we want to create ourselves differently. We want to force ourselves to change and grow and deal with that. And that's also not very normal. It's why people climb the side of Everest when it's 25 degrees below zero. And I don't know, it's just not normal. But we change ourselves through this. So that's part of the game as well. Like, we want to create impact in the world and, create a big team and do really cool things and create wealth in there, but we also change ourselves through this game. And so if an entrepreneur knows they're changing themselves as much as anything in the growth game, then they could be wise about it.
Do you think someone can not have the founder genes and learn to be a founder, or do you think you're kind of born a founder from the get?
I would just say they need to. Some people are freakishly fanatic, and others are not. And so I'm not freakishly fanatic about everything, right? So that's okay. Like, some people are freakishly fanatic about football or whatever. So if you just need to apply your freakishness, like that intensity, the passion, like not just passion, like intensity is a better word. Like those kind of intense people, uh, um, they could be founders. It's not like a founder gene. They just like Ben Horowitz says, it's the hard people doing it's the people doing the hard things. That's pretty much the game, which means pretty much by definition the stuff normal people don't do.
Yeah, that makes a lot of sense, and it's definitely interesting as I meet tons of people, tons of founders who some are just kind of playing entrepreneurship like in college, some are really trying to go for it, go big, and they're just learning, just like me. Like I haven't figured it out yet, right? I'm still learning and trying to be a better founder and figure out what's going to work. But I'm curious, actually. I have a question. If you meet someone who, let's say they've tried to start companies and they haven't been super successful. They had like more success than just failing, but they haven't made it yet. What is the most common mistake that you see these types of people make, or what's like a change that you see founders make, but before they found success?
Well, yeah, so that's a great question because you and I are talking to people before they're famous. My wife says, "How do you know all these people who are big shots?" I knew them when they were little shots, right? And they looked like freaks to everybody else, but they had a certain thing. So there's a couple things in there because there's a lot of. The first thing to say is when you go out and you talk to thousands of software founders and CEOs, right? All size companies, but especially small ones. And not just the venture funded ones and the super cool kids, right? The ones who have made it. So how I built this podcast has the survival bias. Like it's only the ones that won big, right? But if you go out there like I do to all of them, right? You see that the default story for software startups is it probably won't work and it will be painful for like software, right? Different than, maybe restaurant service business or whatever. Lawyers are having a hard time, but we just see the success stories out there. So the default story is going to be really painful. So I know hundreds of founders who are really good friends, and it's always painful. Okay. So there's a lot of smart people. The second thing is a lot of smart people who are doing cool things, and they didn't quite get the timing right or didn't get something right. And it's an alchemy of what's happening in the outside world and what you can do, right? And sometimes, timing is used as an excuse or whatever. But like sometimes people win and then they don't win again, and right, it's it's a little bit more than just them. But when the timing is there, and there's founders, I would first make the cut of there's some fake founders that say I'm going to follow. Like there's a formula. It looks like there's a formula to it now, Matt. I grew up when there was no formula. We were all making it up, and we'd hang out and go, "What did you do? I don't know. What did you do?" Right? And which is why I want to connect up founders again. There's some fake founders out there that aren't really playing it super hard, and that they're gonna get punched in the face a few times and stop. Right? This is why VCs and investors wait a little bit longer now. They want to see people get punched in the face 10 times and get back up and say, "Oh, that I learned from that. I'll keep going. That didn't hurt so much," and so forth. So people totally underestimate how hard the game is, and they think it's a formula. And I don't know. There's other lessons. The biggest lesson that I'm attacking with Scaling Point is the founders are very talented, very energetic, to superpower, and they want to be more generalist. They think they can scale being a generalist, and they don't specialize fast enough. Matt, who are you really best in the world for? Right? It's not everybody who wants content marketing. How fast can you find who you are best for, where there's a crowd that's unserved that you could, find 1,000 customers that have, you're perfect for them and everybody else sucks. So that's the way to scale. And most people don't find that. They don't survive long enough to find their focus that they could scale.
Yeah, that's all super insightful. You definitely, it's cool to have you on because I talk to, as you said, a lot of people that are figuring it out. It's kind of before most people on the show haven't had much success yet, right? And you're someone who you're starting something new, so you haven't had much success yet with like this new thing, but you've had massive success in your career. So you speak with such authority on the topic and knowledge on the topic, and it's just really cool to hear as a young founder
myself. So I have I have to surround my people who like literally have to do the process on myself and go, oh darn it, I have to play the game. Our brains don't want to do this. Our brains want to be cooks who can make anything, and for you today it's this. It's counterintuitive in the firefight where survival, it's just really hard to say I'm going to just focus on this. But it's a move that's there in all that early stage stuff. There's a move of wandering around, and then we just found this and we said no to everything else, and then boom, right? So finding that thing is the trick.
Yeah,
because that's where leverage is. You can't out email, you can't outwork hours, you can't out fund, you can't out something to scale. You have to be best in the world at something where people say it's freaking amazing, and that pull happens. You can't push yourself to scale. You can pull. You have to be pulled, right?
Can you actually dive into what you mean by leverage? In that it's not, you can't just because you send 1 million emails doesn't mean you're going to win. Can you go into leverage for me?
Yeah, it's a little bit of that phase thing. The one phase of getting to $1 million in revenue is pretty much brute force, right? Trying a bunch of stuff, dialing, emailing, throwing it out there, getting to 200 podcasts. I don't know, just pushing hard, right? So that's kind of the version of getting to $1 million. So somebody's got a $1 million SaaS business or software business. I know everything's pedal to the metal, and they're just, getting it up and running. So all their friends, all their relatives, right, all that stuff. Getting to $1 million is way different than getting from $5 to $10 million. Like cosmically different. That's probably the biggest difference in the scale of a business. Maybe 100 million is the next milestone. Like turning to a scalable factory where people line up and you could build it and everybody's happy is really is a real magic trick. So that's the turn in there that most people get stuck at.
So it's like it's pretty much what got you here won't get you there, and you can hustle your way to $1 million, but you need hustle and something else. You need leverage to keep going.
Leverage. Yeah, you need people lining up, and hustle is linear, like in your language, right? You can't add salespeople is a common one for enterprise. Just add salespeople, just add features, just add this, right? And then you go, it works for a while until it doesn't. More works until it doesn't. And it's always there. Usually it gets you between 2 and 3 million. If you have a higher priced item and you have super hustle genes and you're onto some tactical magic trick nobody else has yet for 6 months or something, you can get it higher. But usually that's why VCs wait till, 3 to 5 to 10 million. They know you've kind of worn out all that, illusion, right? That you could just brute force this thing. And so for founders, one of the first things for them to know is like, that's not obvious is whatever got you to $1 million is not the same thing. You actually have to change sports, and it's good that you got there and that's the resource for you, but you have to turn that into a different kind of game. Like, yes, there was 1 million hamburger stands all over the United States in the 50s or 40s or whenever McDonald's started. We all saw the founder. And, it was a totally different game to create McDonald's as a institutional capable hamburger making machine, right? Fundamentally different. That would scale. None of the other mom and pop hamburger shops would. So it's more along the lines of that. And so you actually have to get through $1 million in survival and run out in the field and see what works to turn it into McDonald's. Remember, they said we had a restaurant with all kinds of food and it sucked. So we decided to do just hamburgers, just this way. And it was amazing. right?
Yep.
So they didn't invent the hamburger. They invented 16-year-olds doing it all over the world and selling $1 billion a year perfectly, which, that was innovation.
Yeah, absolutely. Well, I have a couple more questions for you. This has been super insightful, very good for framing growth and thinking about the phases. I want to go back to Greg's list for a couple questions.
Yeah.
If there are people listening and they are in New York, or they're in Boston, or they're in wherever, in Nebraska, and they want to bring Greg's list, they want you to do a Greg's list of their town. Are you thinking about almost crowdsourcing demand, or what should they do? Is there anything they can do?
Well, first of all, they can reach out to me. So this is, it's the macro list, but still Greg. So they can contact me at greg@greghead.com or on LinkedIn or whatever. And I talk to people all over all the time and tell me what's going on. I still haven't found a regional tech software community, Raleigh, in New York, Boston, Chicago, Kansas City, Denver, et cetera, Portland, that has a list of all the software companies. I mean, like all of them, the big ones, the regional offices, the growth ones, the funded ones, the unfunded ones, the vertical ones, the small ones, but they're real software companies, platform, marketplace apps. So people can reach out to me and say, here's what's going on in my town. Here would be useful. I'm kind of taking, suggestions right now, where to go to next. And it does depend, so it's very astute of you, it does depend on how much help I can get from the community to spread the word to get the flame going in the first place. So the ones I'm going to, I have access to the leaders of the community and straight to the founders, right? So it is a bottom-up thing, but I'll hit it top and bottom. So yes, those are the partners that are going to help play it. But, I don't know about New York next. It's really the underdog towns that aren't New York, San Francisco, San Jose, that where, you don't see most of the software companies. And about 15% of all software companies are institutionally funded. Some are funded in other kind of ways. So, in most regions, you'll find that 60% of software companies are not outside funded, which is a darn good way to go if you can get there, right? For most of the business, most software businesses shouldn't be really funded or overfunded. Very few, it should be, of the founders and the market opportunity and the timing should be VC funded, and there are some that should.
I just got this thought in my head. Are you in touch at all with Steve Case of Rise of the Rest? Because he does all of this in all the towns, right?
Yeah, I'll get there. I know him, and I know people that know him. I've met him a couple times and all that. So yes. So there, by the way, here's one of the things that appeals to me about Greg's list is I can imagine getting to 10 or 20 cities and then having real conversations with SaaStr and Steve Case and AWS and,
Yes.
the people in every town and all that normal stuff. And so, and then like rallying the entrepreneurs to do something. Like these are like, I feel totally for the founders and the entrepreneurs themselves. These are it's a lonely job. It's the hardest job. People have no idea. And all they need is help. They need funding, talent, support, therapy from other founders, which Silicon Valley has a lot of that going on. Like organically, people are talking to each other, running around, support. Everybody thinks that's like, if you're the only one doing AI stuff in Kansas City and you're really good, it feels kind of hard out there, right? But if you can get more around and funding and everything, is kind of a national network going on. So Steve Case and all that stuff, I don't know if you can feel it. I'm kind of for the underdogs here, the freaks and the misfits who are making the most change. By the way, everything that's big now, McDonald's, or Amazon or Microsoft or Slack or whatever, it was a bunch of crazy misfits. The freaks in the beginning, everybody thought that's really strange, and their mom said, stop doing that, right? So we have all that because they didn't stop. So I'm for those guys.
You mentioned that, yep. You mentioned there that all of these entrepreneurs need is help, right? They need hiring, fundraising, product, and whatnot. And actually, a question that I always ask on this podcast is, what can the forward-thinking founders community do for you? How can the community help you? You got a lot of people listening. You're starting something new. I'd love to know, how can we help? What's an ask that you have?
Well, they can reach out to me from wherever they are for two reasons. One is to tell me what's going on in their town. I'd love to get a perspective. What's happening in San Antonio, Raleigh, Tallahassee, I don't know, Atlanta, and get a quick perspective there. And I'd be happy to chat with them. And on that chat, I'd be happy to share some perspective of what I see in these thousands of software companies and the experience I've had. We'll do a little trade. So if people want to reach out to me, which is a version of how Gregslist got started. I literally went out and started helping, and people said, "Hey, can you help me?" And help me, and then I found helped 100 CEOs. So happy to help in that trade there. But I'd love to know what's going on in other cities, and what these entrepreneurs are seeing and how they're feeling it.
All right. Well, everyone listening, you heard it here first. Greg, thank you so much for coming onto the podcast. Again, as I said, super fascinating insights on growth, and I think Greglist is really exciting. So looking forward to seeing how it grows.
All right. Thanks, Matt. Thanks, Matt.